Whether you're thinking of trading with a break of structure or you're already trading with a break of structure, watch this presentation of videos that's going to take your trading to the next level. Let's dive into it. So what's the one piece of advice I can give to you as a trader is to always look to simplify whatever you do. Now in this video, I'm going to go through how we can simplify that break of structure with the manipulation phase for you to start looking for trades. Now the easiest way to do this is to first go to the line chart. That is the easiest way for you to simplify something in your trading if you're finding things difficult. Now on this chart, we can easily identify this pair as being in a bearish market. We can easily identify we're breaking to the downside. But where would we look to mark that break of structure? Well, if we now go to a line chart, the line chart is going to make this much more simpler for you. Let's start over here in the market. So we can straight away mark off this last level here. And we can see that this, in fact, is a break of structure here to downside. We pull back, a lower high, we break to downside once again. So we then break this level here. And using a line chart, you're easily going to be able to see where we have a break of market structure and a retest from below. Now, if you've not seen some of my previous videos, I'm not looking for a simple break of support, become resistance here. I'm looking for price to pull back into an area of imbalance. We're going to start looking for the continuation. We have another break of structure. Now, when you're looking for a trade here, we're looking for one of two things. We're looking for the manipulation at a previous high. If in this downtrend, if we're in an uptrend, we're looking for manipulation of previous low. Or we're looking for an area to hold an area of imbalance. So the simple thing here is we will have some kind of imbalance area here in the market where price pulls into, and we're going to be able to identify that we have some kind, let's mark this arrow out, of a manipulation to the downside here. Let's mark this out as a manipulation to the downside. We then continue to break structure, and it's a strong push down. I'm not going to mark all these swing pullbacks. These are going to be on the lower time frames. So there's my last low in the market. We can mark that across. And again, we can see a break of structure. So we just mark that off as a break of structure to downside. Now, when the market pulls back up here, we'll be able to identify there's going to be a manipulation. Remember what I said at the beginning of this video, we're looking to simplify everything. So we're either looking for an area of manipulation to occur at a previous high, on this occasion downtrend, or using that imbalance. And on this occasion, I'm going to say we've probably got here an area of imbalance somewhere, and we've got manipulation at the same time. So the market then pulls back up. We have another break of structure. And where does the market come back to? Comes back to retest this level. Now again, in here, I'd like to see another area of imbalance. But we also could say that we're going to have a manipulation above this high. So we can see that we have manipulation. Let's mark it out. So a manipulation above this high, somewhere here. We'll go over to the price charts in a moment, the candlesticks, we can see where the actual high sits. Remember, manipulation is above a high. This is showing us closed price. Then we're going to identify another break of structure. Where does price come back to? Retest from below. So we have a breakout, retest again. In here, we may have an area of imbalance. We may not, we may have an area of supply. We have a drop-based drop, come back into supply zone. We continue to fall down. We could say there's a small pullback here, but I'm going to look at this as my actual low in the market. It looks more like a swing pullback here than this one here. This is a small pullback. This is more of a swing pullback, which is what we're looking for when we are looking for our trends in the market for trades. So this is a break of structure. Again, to downside, we pull back here. What can we see again? We can see a potential manipulation. Again, we'll go through price in a moment, and we'll be able to identify in here somewhere there will be an area of imbalance. We break through once again. What do we break through with? Again, they'll be in here somewhere, an area of imbalance, and we can identify there's a manipulation here. Remember, the manipulation is going to be on those previous highs and lows, and then once again we break structure. So can you see how, using a line chart, we've gone through this chart very quickly. We've marked off the break of structure, potential areas of manipulations and areas of imbalances. Now, an area of supply will be at these peaks as well. I haven't marked those out yet, but can you see how quickly we identify we're in that bearish trend, where we're breaking structure, where we're looking for the manipulation, the areas of imbalance? We know we're looking to sell this market. This is all achievable once you just use the line chart. So looking at this current chart, let's now go and place on the candles. And we'll go back to where we started this move. So we started a breakout, pullback, and a breakthrough. Okay, let's go closer into price. This is our breakout area. What do we leave here? We have an area of imbalance. Okay, so the market pulls up to fill this imbalance. Eventually right here, we fill that imbalance and we create a manipulation at this level. So we can mark it off, manipulation, a pullback, and a continuation to break structure. Once again, when we break through here, we in fact leave this area of imbalance. This would be my preferred area to draw than this one. This is the breakout candle. We continue to fall, we pull back. Now we do break structure here, but this occasion we haven't actually gone into this area of imbalance. We broke structure, we made a reversal here, we went back up to manipulate the high, and we go into this area of imbalance. Now we could have perhaps taken a loss here, thinking that we've already broken structure and this was a pullback to continue lower. But look, price never breaks and closes above this high. We just manipulate this high and then we drop away. And it's manipulating this high into this area of imbalance. We now break through to the downside again. Now there's no area here of imbalance, so we'll remove that. But we could look at this area here as a drop-based drop, area of supply. And we can draw out this high as what? As our manipulation. So again, we have a pullback, manipulate above this high, inside this area here of supply, and a reversal back out with a nice bearish engulfing candlestick. Now on a lower time frame here, we may find a better zone. We may find even an area of imbalance. But there's your manipulation on your pullback, looking for the lows to be taken, break structure. Remember, when we're looking for any entries at these highs, where we're going to target are these previous lows. So the market again breaks out. There's no area here. Once again, no area of imbalance. We do have here an area of potential supply. But more importantly, what do we see happening on this pullback? We can identify here a manipulation. So again, we even have this small pullback, manipulate the high, nice looking pin bar, and the market drops away. Now when we drop to the downside here, we can draw out this area of imbalance. It's a small area of imbalance. The market then pulls back. So we have a small break of structure here as well. You could mark this out as a small break of structure. Just mark that out. And the market breaks through with this candle, leaving this area of imbalance. There's our pullback into the imbalance. And again, we can mark off this high, this candle high. We manipulate above, pull back down. And again, we have one more manipulation right here above the high of this candle, engulfing candle. Where do we go for? We go for the lows. We have another pullback. Now again, understanding the imbalances here, we do pull back into this imbalance. We fill it, we drop out, we break structure. This candle here breaks the structure, leaving this area of imbalance. And then we have a pullback once again into this imbalance. What do we see again? We have another manipulation. And again, we go for the lows, removing the break structure once again. So again, when we break through this time, unlike this push through, we've just broken through, we made actual manipulation to the upside. So there is a reversal point in the market, manipulated, and then we rally back up. So What can we now take from this? Well, we have an area here of imbalance where the market may want to push into, and we could even see a manipulation of this high at the same time. That is what we're looking for, potential. Now, if we close through this high and this imbalance, and then we're going to continue up, we could then look at this high to be manipulated. And if it closes to that high, then we have a trend reversal. Now, going back to the line chart, you can see how we can identify this area, this high, to be removed. If we see this high removed, and this is then a break of structure to the upside. The move up, and we break that structure, we just change that to the break of structure up. So we see this break of structure here, then we're going to have a bullish bias. And then we can start looking for buys again. So that is my simple take to help you find the break of structure, your areas to take sells and buys from without manipulation and the use of imbalances. So I'm on the pound Japanese yen on a monthly time frame, and I want to share with you the use of this line chart trading strategy with a break of structure, how you can apply it to any single time frame. So first we'll go through this monthly chart, then we'll pop down to daily so you can see how this can be applied throughout any single time frame. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. So the first thing we need to understand is the traditional way we look at break of structure is we're using the swing highs and lows of those candlesticks. Now, when we're using a line chart strategy, pop over to a line chart, we're looking at these swing points on a line chart. Now that's going to show us the closing price, which to me is more accurate than the use of those wicks. The wicks are where you're going to see the manipulation phase. We're going to see the manipulation of previous swing highs and lows and into areas of supply and demand, which you'll see in a moment. So let's take this chart. We're going to look first from this swing high, and we'll go through this price to see how you can apply this break structure line chart trading strategy. So let's just remove that quickly. So the first thing we need to see is the market needs to break down and remove this area here of structure. That's the last swing low where we see the push to the upside. Now it does break it right here. Now what I'm looking for to mark out my area of supply and demand here is I want to see a red candlestick. So let me go back to the chart and we can see there is a red candlestick to downside as we break through. So we now quickly pop back to that line chart. See, this is that swing high. So this is the swing high what breaks through this swing low. So that's the area I'm looking at on the chart. As long as I can see that breakthrough with the red candle, then I can mark out my area here of supply. That's an area of supply that I'm interested in the market to see if price comes back to. Now we can see that's where price is now coming to. Now this is a monthly time frame. So we've got years of data sitting here. So we look at this now and we go back again to the line chart. The market continues to go down. We're looking for the next break of structure. Next break of structure is this move here to downside, taking this swing low. Back to price. Does it break out with red candle? No. So we go back to the area once again. The next break of structure I'm looking at is going to be this break to downside. Does that break through a red candle? Yes, it does. I can then draw out here an area of supply. Now, looking at the chart, you can see the market does come back into the area of supply. We go all the way back down again. So we had a reaction, and this is how we're going to look at this on the market. Now, when we actually start looking at this area, we have this break here to downside. Do we have, once again, a red candle? No. But What you need to take care is that from this swing low, this swing high is broken to the upside. So once you identify that and go back to the chart, does it break with a green candle? Yes, it does. This now can be my area of demand. So I hope you can see how we're using the combination of the breaker structure with that line chart, and then we're marking out our areas of supply and demand. Now we go back again to the line chart, and we can identify the market goes up, pulls back, and we break out to the upside here. So this is a very minor break. Perhaps this is a better break. Does it break with a green candle? We do break there with a green candle. So you can mark this out as an area of demand. And we can identify the market after the close of this bearish candle. We do actually wick back into this area of demand, and then we push up to that supply. So if you were looking for a trade here, perhaps on a daily, you could have caught a trade here off a daily and held it all the way back up to that supply zone on a monthly. Now this is using multiple time frame analysis, and it's important that you use that multiple time frame analysis when you're looking for those entries and targets. So going back to the line chart, we can identify we have another breaker structure to the upside here. And yes, we have another green candle. So this actually is another area of demand. Now when the market does come into this area of supply, you've actually got limited room to trade back to, because we've got a demand zone sitting below. Now we do have a reaction off that demand zone, then we have a lower high here and we continue to break down. So let's see what happened. We have supply control to this area. We then have demand in control here. But now we go back to the line chart and we'll use this level. We go up, we need to break this low. Basically, this is my low I need to see broken. That is broken here to the downside. If I then go back to price, it's not broken with red candle. The only red candle we see on the way down broken is this one here. That area of supply is the area that goes down and breaks. Go back to the line chart and you'll see that this break comes from this swing high, and on the way down to break it, that's the only red candle we have. So that is the area of supply. We pull back into that supply, we drop through, okay, we wick through, removing this area of demand. Okay, we then also remove this area of demand on the way down into this demand zone. This is where, now this is the origin of the pullback. This is a great area to look for a trade back out, but again, we're looking for those breaks of structure. Another break to downside, we're back to price. Yes, we broke out with a red candle. This then gives me a new area here of supply. Now look at the way the zones are starting to stack on each other, and the zones are starting to get smaller and closer together. This indicates that potential reversal is coming. If we now go back to price, yes, this is in hindsight because we can see on the chart we do go back up. So again, the next area to break is this very small basing area. If we look back in the chart, you can see how the market makes this drop, base drop. It does leave an area on a red candlestick, but it's not an area of supply I want to draw. It's a drop-based drop zone of supply, but I want to see those origin moves with a swing high. It hasn't got a swing high, so I'm not going to take that as an area of supply. The market does come back into this supply. Okay, we have a reaction. We go back. Let's go back to the line chart. The candles. See, we come into this area of supply. We have that reversal. We push back through, take this swing low. And again, the next area we want to see broken was going to be this high. And that is broken over here. So mark this out. We don't actually reverse until we break through there. We go back to price. And we break through with a green candle. So from here, I can mark out a new area of demand. And what that actually shows me now is that we remove this area of supply. Okay, it shows me the demand is now in control. We had demand zone held. We've broken through, removed an area of supply, left a new area of demand. Demand is in control. I'm not expecting these areas now to hold. We go back to the line chart. We can then look at what happens here. We have a small breakout here. Bring that back. This small breakout, we go back to price. You can see that removes this area of supply. Okay, so we have a breakout. Is there a green candle? No. So we go back again to the line chart. We look for the next breakout. The next breakout is going to be this level. Very small breakout, not a great breakout. This is my breakout level. Okay, so this is my swing low. There's my breakout. Looking for that green candle. There's your green candle. So this is my swing low. So potentially this would be your low of the zone. This would be my area of demand. Go back to the chart. We can see the market actually goes up, comes into the area once, pushes up, comes deeper into the zone, pushes up again here. You can see we have another break structure here to the upside. Okay, with this break here, pull back, breakout, we go back to price. Is there a green candle? No, there's no green candle here. So back to the area, we pull deeper, we have another breakout to the upside. Guess what we've already done? We've removed this area of supply, by the way. And now we can see demand is in control. Remember I said here, we knew demand was in control at this point. The only area of supply really you want to be looking at this point is this area of supply, which is in control. This is the origin of the move. This is the only supply zone really I'm interested in taking a sell from if we have a reaction. So we can see here the market breaks out. Okay, break structure here to the upside. And again, what do we break out with? The green candle. So we have even here another area of demand I can draw. And looking at price, we can identify that demand is in control. Now I did say you can apply this to lower time frames as well. So we now just go down to a lower time frame here, go to a daily time frame. We'll leave this area of demand. Let's remove these other zones down here. Don't need these zones. We'll remove this one as well. And we look at, just leave this one and this one on the chart. We'll go down to daily. Let's have a look at current price. So we can identify down here. In fact, let's just remove this area of demand. Let's do the same thing. Let's read price. So once again, we can identify, go back to the line chart. The market, again, comes up, breaks this structure. We break to downside. We then continue down. We pull back. We break structure head to downside. We pull back again, lower high. And we need to break this high. We don't. We go back. We break structure to the downside again. So now we need to see the market breaking this high to show me a reversal, new area of demand. And we go to the price chart. We break up with a green candle. We do leave as well down here the origin of that move, area of demand, green candle, price pulls back in. Again, I know this is in hindsight, but go away, apply this strategy to your charts. See how it can improve accuracy. Go back to the line chart once again. Market comes in here we can go down to lower time frame, do the same thing again. You'll find that trend reversal, understanding those areas of supply and demand. So the market goes up, we need to see a break of this high. This is the pullback, we break out. This is the origin. Okay, this is the breakout area. So we've got two areas we can look at. We go to the area, we have new area here on a green candle. We do have an area here. So I can mark out this as my area of demand. Market comes back in. We go back to the line chart again. Smaller area, breakout. Do we break out a green candle? Yes, we do. We have an area of demand. Does the market come back? Yes, it comes back into demand zone and we rally back up. Now the market here is actually going back up into this area. We wick it, and we close through, and we'll go to that in a moment, what's happening. But we can identify, now look at the chart, we have another breakout. So it's easy to see, using this strategy, that we're in control of the demand. We're only looking for buys. We go back to price. Yes, we break out again with a green candle. Now this, again, is where we're going to find a losing trade. The market comes down, we wick through, we had a loss. In fact, all this area now removes all these demand zones. But do you see a red candle in there? No. So is there an area of supply? No. Where's your first area of supply you can draw? We go back to price. We'll break here to downside. Okay, red candle. There is my area of supply. That's the supply zone. You can see we test it, we have a reaction, pull back, and we break it to the upside. So you guessed it. What happened here, we had a new area of demand created as we broke supply. You're always going to find an area of demand will remove a supply. So when you start applying the break structure with the line chart trading strategy, you're going to find it's a lot easier, much more accuracy in your trading as well. So again, on the way up here, we go back to the line chart. You can see we have a break structure here to the upside. So just we saw here, we have this high. We have a break structure. Back to the chart. We don't break out until here with a green candle. So we can mark out here an area of demand. Let's just remove these ones, what were removed. And once again, we go back to the line chart. You can see that area is this breakout to the upside. Okay, we did have this area here, breaks the upside, so you could actually draw an area of demand. You just find that area. This will be area of demand that we can draw. Again, we can see demands is in control. All demand zone is in control. We break this area here of supply. Break up, new area of demand, move sideways. We can just do the same thing again. Look, we're looking for those breakouts. We break out here. This is your high, pull back. Now there is a way to look for trade here. There's a manipulation I was talking about at the beginning of this video. This is a wick manipulation. Wick through, there's reversal, and there's a way to trade this type of trading. And this is all coming into this area here, this green candle. That's where we see the removal. We don't always come back to demand zone. But looking here, we have a breakout again with a green candle, that area on the breakout. We have a new area of demand. Once again, demand is in control. And again, you do the same thing. We have small areas here breaking up. And quickly look, I can see and identify very quickly here. We have an area of demand here. We retest it. We then have another area of demand here. Another breakout. Once you start to see the chart, you're going to be able to find these zones quickly. You can see demand zone, demand zone, demand zone. This is easy to see once you start reading price. Then when you go back to line chart, you can see all these small breakouts, what are happening. Another small breakout there as well. New area of demand once again is right there in the market. And this is all you're seeing in the market. We're seeing strength now coming in. The market's going up. If we now go back to line chart, we have a breakout there. Was there a breakout green candle? No, we don't draw any more areas of demand. So what you can now identify is that all the way up here, demand has been in control. Not once have we seen supply come in. And where's the market now coming into? An area of supply on the monthly. So what are we expecting to see on this market? Right now on the daily time frame, on the pound Japanese yen, we're looking for the market to pull back. Now it's not going to come all the way back to this demand zone because we've got areas here on the way up on those green candles. But what we're definitely going to see happen in this market is if it's going to reverse out of this area of supply, we're going to see it come back for this swing low first. Now that is where I'm expecting to see the market go. At least take this swing low if we come out of this area of supply. Now, if we do look back on the daily, just look back here. We know we've got the monthly area of supply. This is where you can use multiple time frame analysis in your trading. We can now see using this area of this technique of the breaker structure line chart trading strategy, we can identify we have a break here to downside. That break of structure, mark it out for you. Break structure to downside. Do we have a red candle? Yes. Can we mark out an area of supply here? Yes, we can mark out an area of supply here. Now, this area of supply is just there, I believe. Then we look back to the line chart. Once again, another small breakup right there. And we have another red candle. I can mark out another area here of supply. And finally, I also can see here another zone of supply that I can draw all inside this area on the monthly. Now, if you go back to price, we know that price is inside this area of supply right now. You can see it's inside that supply zone right now. Now push up into the larger zone on that monthly would be better inside this area, which is nested inside. But using the breaker structure with the line chart is going to give you more accuracy on determining that direction in the market, seeing whether demand is in control or supply is in control. Now, this is a great way to improve your accuracy going forward in your own trading. So let's look at this chart on the DXY, and we're going to go through how you can simply use that breaker structure to look to mark your areas of supply and demand. It's going to make it so much more simpler for you to mark those zones, and believe me, you're going to find it an easy way to start looking for those entries. Now, when we're doing this, you understand the use of the breaker structure and understanding the use of that change of character hopefully as well. Now, if you don't, there is a video which at the end of this video it goes through the difference between the two, because you really need to understand the difference between the two when you want to start using those for your entries with that change of character. So let's look at this area. We're going to start from this low in the market. We're going to start from down here. I'm going to go through this chart quite quickly to show you how easy it is to mark out your areas of supply and demand using this technique. So we're going to look at first where we see a minor break of structure here, to then we see a major break of structure. Zoom in. So once we see this break of structure on this bullish candlestick, we then have an area here we can draw of demand. That's my first demand zone. We can see the market breaks up, pulls back in. We have a manipulation on the lower time frames, and we continue higher. That's the first area. Once we see this, we can see the market continues up and we pull back. This then becomes my next high in the market. That's our breakout. Again, we mark out our area of demand. There's my area of demand. The market comes back in and we continue higher, and we have another breakout to the upside. Once again, we can look for an entry down here, manipulation. Understanding all that is going to help you to find those trades. So again, we continue on. We have another break of structure. We have another area of demand we can draw. Okay, we do actually break through that area, whether we draw it from the open price of this candlestick or we draw it from the high, that's totally up to you. We do come back, we have another rally up. Once again, there's another break of structure. Very hard candlestick to use for the area of demand, so we're probably looking at this whole zone, and eventually we can see we break through, removing that area of demand. Now, this video isn't really to go through where we're looking for the entries, but you are going to lose even using this strategy. But when we see this reversal, we create an area here of supply. Change that. So the market then continues to drop. We have another break of structure here in the market, and we create another area of supply. We break through, reversing our market where we see the removal of this high. Draw this out. We have another break of structure right there in the market. That leaves another area of demand. So mark that out, area of demand. Drag that across. We then continue up, breaking structure. We get into this high. We can mark that out as a new high. We do break with this wick and then we close through with this candlestick. So I'm happy then to draw this out from the low of this move here as an area of demand. The market comes back in. This is what I call a tested zone as well. And we can see that the market breaks below. There's a manipulation. Again, we're not going to go through entries to show you how to quickly mark out your zones on the chart. Again, from this high, we have another break of structure, leaving another area of demand here in the markets. Whoops, let's mark that back up. And the market continues higher. And again, you can see we have another break of structure there. And this big candlestick becomes my area of demand. We do pull back to it. But before that, we do have another break of structure, leaving this area here of demand, which gets removed. When we see that removes these lows, which is structure in the market, leaves an area of supply. Okay, and the market then continues to fall. We have another break of structure here, leaving an area of supply here in the market. We also have another break of structure right here. See how quickly you can mark out your zones. Just mark this off this high. and then eventually the market comes back up, makes a higher low. We then break and remove this area of supply. Now that is then another break of structure here, which is leaving this area here of demand. Mark it out as demand zone. That is the zone what broke through. Okay, we do have a smaller zone here, but this is the zone what broke through this area of supply. The market then eventually breaks this area. So you can see the market comes back up. We have a false break through the high of zero supply. We fall back to zero demand, another pullback. Okay, now why does this happen? Because we have this low here in the market is a breakout, leaving this area here of supply. So very quickly we can mark these out once we start reading the break of structure. Another break of structure there, move it across. This is an area of supply. Okay, so we wick through that one. That's just going deeper into this area, which is in fact then a tested zone. We have a tested level right there. The market continues to go down at this point. We have another break of structure right here. That leaves another area of supply. Again, you can draw it from the body or from the wick of that zone, whichever you prefer. And then the continuation to the downside, once again, we have another break of structure here. That leaves me another area of supply. I'm just probably going to draw it from these candlesticks. Okay, so the market drops down, pulls back. And this is the last low. Okay, so this is the last area of supply. We get a breakout again. Now what breaks it is this area of demand, but we have this area here of demand as well. So I'm most probably going to use the whole zone. Okay, then the market comes back. We have another break of structure here on this candle to the upside, which then leaves this area of demand. That gets removed. As that's removed, we create this area of supply. And yes, we can see that the market is bouncing between these zones. We're having some losing trades, but we're not going to win on every trade. We have a small break of structure here. After we break then this major structure break of this level, okay, and removing that area, that leaves an area here of supply. Market comes back up, and once again we have another break of structure here. Okay, we have a small break of structure which is an area of supply, but because we have an area of supply above, we don't need that on the chart. We can see that this area of supply is removed straight away. We pull back into that supply zone, we drop out, and we leave this area of supply as we break this structure. So now we're just waiting for the market to pull back. Now we have a big area of imbalance. That is on another video. We can understand imbalances. There's plenty of videos in this channel, but this is the simple procedure using that break structure to draw your zones. Let's now shrink that chart back out. We quickly went through from this low. We can see where these areas of demand were holding. Where this area of demand has been broken, and we have this area of demand where price is now just about breaking or bouncing off there, nearly broke it. Okay, we had this area of demand as well, which, let me just quickly go back in. This is a tested zone, and the market went deeper. We got a reversal. So hopefully this technique will allow you to quickly find your areas of supply and demand. Now, if you're not sure about the break of structure and the change of character, now the change of character is the confirmation entry. When we're looking for entries off these zones, we're either looking for that set and forget strategy or the confirmation entry. Now, first, let's go through what the break of structure is. Now, the break of structure is simply going to be when we see the market making a trending situation, and the break of structure will be in the direction of that trend. So this is going to be our area of structure in the market, and when we see a break of that structure, that's the trend continuation. Now, when we're looking at a change of character, the change of character will be in two different ways. Either for the major trend, and we're looking for a change of character to break and basically just be a trend reversal. And then you'll be looking for the market to show you that it's changed its character with a continuation with another break of structure in the direction of the new trend. Now, many of you believe that it's the same thing, but it's not. It is a completely different technique. So let me go through in this chart and explain on the charts exactly how you'll be looking for a break of structure, and then where you'll be looking for that change of character. In fact, I'll go through to BTC and bits later in this video and go through how you can look at a trade using this concept. So we're on just DXY. This is a chart I like to look at to make any of my trading decisions based on anything crossed with that US dollar. Now, when we're looking at the market here, you can simply identify we've been in this long-term uptrend. And the break of structure starts at this level here in the market, where we see the break of structure here to the upside. We then have a pullback to retest that area. We have another break of structure. Again, we see another structure made. We have another breakout right here after a pullback. And again, the market breaks up once again. And that is simply what the break of structure is showing you. Every time we see the market pulling back on that trend, we see another break of structure. So if we continue to see a break of structure, then you continue to looking for those buys. Even here, we can see this wick on this candle is classed as a break of structure. Now, many traders will prefer to see a solid close of that break of structure, but you don't have to have it. Because if we're looking at a lower time frame here, you're most likely going to see a close through this level on a lower time frame. Now, the actual reversal in the trend is not going to occur on this one until we see the market breaking down, breaking this low in the market. That's why I've marked this out so you can see exactly where that trend reversal will be. So we're on the weekly time frame. If we are to see right here, price decides to turn down and it breaks the trend line, breaks this structure low, that would be classed as a change in character. It's the trend reversal. Now, later at the end of this video, there is a great video coming up next, which goes through what I call that trend collapse strategy. So I do suggest watch that video because that's going to be based on this type of entry, understanding a single time frame when we see that change of character with the trend collapse strategy. So that is how you can identify this with the trend using the break of structure, and then you're looking for that change of character. Now, remember the difference is we're looking for the market to go with that trend when we're looking for the break of structure each time. You're looking for the market to come back to an area of either imbalance, or we're looking for the market to come back to an area of demand on this occasion for your entry. Now, when we do see this area here holding in the market, why is it bounced? Well, we have a third test of the trend line. Now, I use my trend lines in a different way, and you will learn this later in the next video in that trend collapse strategy. We do break structure here, but look, price has never come all the way back to this area of structure. So if you're a support and resistance trader right now, you'll be looking for the market to come all the way back here to retest that broken resistance for any buy trades. Now, by the time you've done this, you can see the trend line would have been broken. So why did we see a reaction here? Well, the simple reason we see a reaction is based off this area here, which is an area of imbalance. Why we see a bounce head to the upside, breaking that structure. So this, to me, is a valid break of structure, whether it's a close or it's a spike, but it must be, and this is important. Let me just grab an arrow. It must be, this candle must be a bullish candle. I don't want to see a bearish candle here. If we had a bearish candle here, then I would be expecting price to fall straight away. Now, at the moment, we've had the inside candle, this bearish candle. So we could see a nice push higher today, closing through, continue to break this structure with a nice solid closed candle. If we don't see that and we see a bearish candle closing through, we have an area here of imbalance I've drawn. If that is closed through, then I'm most likely going to see the market breaking this structure where we see that change of character on this higher time frame. Remember, the change of character can be applied to the higher time frame, or we can use it as a confirmation entry or the change of character with a lower time frame. So to demonstrate that, let me just now go over to BTC. So now we're on BTC. Let's go through understanding the two differences once again with that break of structure and the change of character. So we look at the chart here to the left. We have a previous swing low. We have a break here to the upside. Forget all this price action here. We're just going to start from here. We have a pullback, and then we have another break of structure. And if we go actually closer into the chart here, we also have a small pullback, break of structure right here in the market. See, valid break of structure, and then there's your change of character to the downside. Now, there's a lot more going on here, but that is for another day. Now, once we see this breakdown, where's your next break of structure? That is going to be your next first break of structure, we pull back, make that basing, and then we drop through to break that low. This creates this area of supply where we can see the market pulls back in for a perfect trade. So once you can see this on the chart, it's going to help you to start finding these types of trades. Now there's more here where we have some liquidity and we have the market pushing up into areas of imbalance. Now what happens is we continue to break structure. So we continue to break structure to the downside, and that would give you more areas of supply. So you can see the market continues to break more areas of supply. Again, we have another pullback, lower high, break of structure. Now I haven't drawn an area of supply, but I have drawn an area of imbalance. And this is more I go through in that Forex Masterclass, how I use those imbalances, not only for actual entries, but targets as well. Now that is more what I call an imbalance level. So we can see the market is now in this area here to downside. So we are bearish. We're really looking for sell trades, but a good area for sell here on this time frame when we pull back to this area of broken structure and this area of imbalance. Now, of course, a change of character here. Where would the change of character occur? This is our last swing high. Pull back here, that's your change of character. If we then had a pullback, lower high, this is our first break of structure. So there are the two differences once again. So you can see the difference. Now again, like I said at the end of this video, so keep watching. Then you can watch that trend collapse strategy video, which goes through the trend lines and understanding this change of character in more detail. So let's have a look at this area now on a lower time frame. Let's go to a 4-hour time frame, and I'll quickly show you a trade you could have caught. Now, personally, I missed this trade, but it's a great opportunity to share with you how you can use that change of character. So we have this drop to downside here in the market. This creates an area of supply. We have now broken out this trend line. For me, I use areas of trend lines. I'm looking for potential areas to take trades. So we now have an area here of demand and imbalance. I'm looking to take a trade off if I see the reversal on the lower time frame. We also create an area of liquidity here. More on that perhaps in another video. And we create a small area of liquidity here in the market, and we take this previous high. Now, looking closely at the candlesticks is a great way to understand which way the market's going to go. What do we have once the market took out these highs? We have a nice bearish engulfing candlesticks. That's all about the manipulations in the market. It's not just a manipulation of these highs. There's another reason why the market reversed here, and that's not about the supply either. So for a change of character, we'll be looking for this low to be broken. So we break out here. At the same time, that's your first break of structure. So on this occasion, we're seeing on this time frame the break of structure and the change of character at the same time. That makes this area of supply. So this is your area of supply in the market. We're looking for a trade. It comes back, it tests that supply zone to the pip, and that would have been a great set and forget strategy entry, and you could have taken the trade down to take out these previous lows. You could have the first target at these lows, second target down here. Now we're expecting the market to take lows because it's an area of liquidity in the market where it needs to go to pick up more orders before it can pull back to the upside. So that is how you can look at using the break of structure compared to the change of character. Now right here on lower time frame, we'll quickly just have a look at the 1 hour as well. You'll see on the 1 hour time frame, we had the same situation. But this time we had this low here as your change of character. This creates this area of supply, and the market comes back in and retests it on this area for an entry. Or if you missed that, we have another manipulation for an entry here, which would be a great time to take a trade. So that is how you can look at applying the use of the break structure or the use of the change of character. And they are totally two different things. Again, let me just go back to a weekly time frame. We will do a sketch once again so you can see the differences. This is your trend direction, and every time the market does this, what's it doing? We're seeing that break of structure each and every time. Okay, now the change of character would have to break this previous low for the change of character to then look for entry to sell. Now you have a much better understanding of how to use the break of structure in your trading. Then why not check out those 2 time frame entries I went through in the early part of this video, and you can check that out by clicking the link right now.